Welcome to Top of Mind, the show where we talk to real estate industry insiders and experts about the biggest trends impacting the market today. Enjoy the show.
Mike Simonson here. Thanks for joining me today. Welcome to the Top of Mind podcast. This is where I talk to the smartest leaders, thinkers, and doers in the real estate industry. For a couple of years now, we've been sharing the latest Altos research market data every week in our weekly YouTube video series. With the new Top of Mind podcast, we're looking to add some context to the data. So context to the discussion about what's happening in the market from the leaders in the industry. Each week, Altos Research tracks every home for sale in the country, all the pricing, all the supply and demand, and we do all the analytics on the changes in that data, and we make it available to you before you see it in the traditional channels. So visit altosresearch.com for free consultation on how you can use market data in your business. So without further ado, let me introduce my guest today, Joe Curtis. Joe is the Chief Operating Officer of the real estate escrow and settlement services provider, Pango Group, based in Southern California. As COO of Pango, Joe helps achieve the company mission, running an exceptional real estate services business by being a driving force, keeping Pango ahead of the curve at the forefront of the evolving technologies in the settlement industry. We're going to talk about a lot of the technologies and where the industry is going today. In 2019, Real Estate Magazine named Joe one of its top 100 people in real estate. So welcome, Joe. Thanks for joining me.
Thanks, Mike. Excited to be here.
All right. Well, we've known each other for a long time. We've done business together, Altos and Pango. But for our listeners who don't know Pango Group, why don't you give them a quick overview on the company, and then also what are settlement services? And in California, they're escrow services. Why don't you tell us a little bit about Pango and the specific slice of the industry that we get to learn about today?
Yeah, I'll give you the 30-second kind of elevator pitch. So the Pango Group is a real estate settlement services company based out of Southern California. And our primary business is running and operating escrow companies. So we're on the settlement side of the title and escrow kind of like business. We have a couple of other ancillary real estate services businesses, like a notary company, and we do some document archiving and stuff like that. But our core business is really being that neutral third party in escrow and providing the settlement portion of the title and escrow. And so that's important to note, because title and escrow aren't done the same kind of nationwide. And so in the title world, you have the insurance part of title, which is ensuring the chain of title and making sure that the transfer of property happens well. And then the settlement side is really you have closers or escrow officers or closing agents, and and they're handling and balancing the file and making sure that everything is kind of like done properly, making sure that the things are transferred. And then they're having that signing the buyer or the seller, depending on the market that you're in, and really providing for that kind of like customer facing experience. And so that would be kind of like the settlement side, right? And then we settle and we disperse all the funds after the property closes. So
got it.
Those are kind of give you the two sides. You have the insurance side of the business, and then you have the closing and settlement side of the business.
And you guys have focused on this closing and settlement side of the business.
Yep.
And California you do business all over California.
All over California. Yep.
And that's different. It's always fascinating to me how the transaction customs are different all over the country.
Yeah, absolutely.
And you know why that is? Like how we ended up this way?
I think that real estate being, we get asked why there are so many MLSs. I think that real estate especially has been done kind of locally forever. And the title insurance business is based on like recording documents at a county level courthouse. And so I think that that's probably a lot of the history of it. And so in each, county, they're going to have, in Louisiana, they call them parishes, right? So you're going to have different customs that are going to be related to that state's regulated body. And then you're going to have some regional differences. And so I think that's where, you look at lenders. Lenders have like a national, like federal regulation, whereas title and escrow are really regulated on the state level. And I think that's where you get a lot of the nuances.
I got it. It's fascinating. Yeah, it's just amazing how different the expectations are and the transaction processes are. But so the fun thing about today is I'm interested in learning about how that is changing. And there's some real big technological forces on the horizon. So I'm interested in talking about some of those today. And seeing what we can come up with. Let's start here, though. We call the podcast Top of Mind. It's now end of February when we're recording this. It'll be available in March when we share it. But the market's been on fire. What's top of mind for you right now?
Yeah. So the market has been on fire. It's insane. I was actually looking at, Altos has these great like regional or county-based reports. And so I look at those they're a little bit more macro level than the zip code specific. And I was looking at the San Diego market, and the market action index is like 97. It's the highest I've ever seen it. Like neutral is 30, and like that's a 97. So obviously, like everybody's talking about what's happening in the market. Where that relates to me as like a chief operating officer is I'm looking at the job market, and I'm saying like, how do we that's really top of mind for me right now is like finding quality people. I think you can look at across sectors and segments around this. But that's really one of the things that's top of mind for me. And the interesting thing is the nature of how we work has completely changed over the past 2 years because of the pandemic, COVID. And, there was a time when people had the thought that, hey, you have to have like a local closing office, right? Because people are coming in there. And that's what's really, really important. And we went through probably 8 or 9 months where we didn't have a client in our entire office, like in any office that we had, right? And so people were like signing at like in the parking lot, or all of a sudden digital signings came around. So it's really around like, hey, how do we staff? So like not only finding people, but how do we kind of fit them into this new kind of way that we're working? Whereas, it's less important to have like somebody come in and sit in a conference room and have a bottle of water, a cup of coffee, and sign their loan docs. It's changing the way that we work a little bit. And that comes into a lot of the technology that enables that. And it also just comes into kind of like the habits that we thought were important beforehand and now what we think now. So
so big changes in the last couple of years. But before we talk about the technology and some of those, tell me about your team. So because top of mind is like, who do we put in this industry? Tell me about what's the team look like and where you're going from here.
Well, so team is I think we have one of the best teams in the business at Pango Group, and so that is going to go at a couple of different levels. And of course, I have to say that, but I actually really believe that. Taking a look at the landscape, and so you have your core kind of service providers are going to be your escrow officers. Like your escrow officers are there. They're really managing like a volume of transaction that we haven't seen in ever, or at least in the last 15 to 20 years that I've been in business. So you have this really like that customer interaction. We have about 55 escrow officer units kind of spread out throughout Southern California, and we do business all over the state. And then we have our support team. And the support team is really the leadership team. And I think like support and leadership kind of go hand in hand. And that team is really designed to say, hey, how do we support and make sure that this customer experience is good, so that we are making raving fans out of all of the people that interact with us, whether it be, the buyer and the seller who are paying our fees, whether it be the real estate agents who are referring us business, whether it be like the FedEx guy that comes into the office every day, kind of wearing a mask. And so he walks in and says, hey, there's something different about this place. And so our team is structured through kind of like a regional management kind of structure. And we spent a lot of time in the last 2 years really investing in kind of like leadership. because the way that we communicate today is different than the way that we communicated 2 years ago. And we're having to kind of rewire our brains a little bit in terms of like, you get these old pathways of saying like, hey, here's how we communicate as a team to make sure that we're getting a great experience. And then all of these changes happen and you kind of have to rewire the way that you think about even communicating internally, right? With all kinds of new tools, like what we're doing right now through podcasts and like getting out great content and information that's valuable to people that can kind of take action on it. Or how are you like reducing the, I mean, I used to get, a good example is like, I used to get probably 200, 220 emails a day, right? Like that's, some people were like, yeah, that's nothing. I get 1,000. Like some people were like, what? Right? Well, we switched to Teams, which is kind of like the Microsoft version of Slack. And my emails per day went down to probably 50 or 60 because all of this internal communication that we're having to now manage on these different platforms. Some of it has been really, really good and kind of stretches your thinking. And some of it's like, hey, whoa, I got another thing that I got to kind of relearn. But what's good about all of it, and you asked about the team, is I think the most important thing today for us is for our ability to be comfortable being uncomfortable. Meaning, like, we got to be learning, we got to be saying like, hey, if I'm not like continually getting uncomfortable just a little bit, that means we're not really pushing ourselves as hard as we could to make sure that we're doing the best job for our people and the people that are paying our bills.
So that's there's a lot to unpack there. There's some really good trends. So the changes, and we've been talking about there's technological changes in the process, but it's interesting that one of the first technological changes you're feeling is just moving to Microsoft Teams, like just shifting from email to the. Does that, so I know during the pandemic, we already had Slack. We already did most of our communication via Slack. And the reason that those work is because there's a lot of overhead in email, every email sent that gets eliminated and streamlined out. That makes a ton of sense to me. In our company, we have a global team, and we started doing more Zoom calls. We're actually more connected now post-COVID than we were ever in the pre-COVID world. And so does that, in your case, is that translating into improved product or service in some way for customers?
Okay, so this is a great question. Okay, so I thought about this a lot, and you have to understand. I think one of the things that if you take a look at our industry is like 100 and somebody at First American Fidelity is going to give me like say no, it's actually this specific date when the title insurance industry started, but let's call it like 100 plus years. I was going to say like 120, but let's call it 100 plus years old, right? Historically, we've been a little bit behind other industries in terms of the technology that we've adopted. I don't think anybody would get incredibly upset about me saying that. I just think that that's been my observation, which is why it's been easy to kind of implement some of the changes that we have. And so you asked a question about like, hey, how does these changes impact the quality of the service? Like, does it actually really help, right? And I think that so the only like evidence that I have is when we ask customers, like, how did we do? We just closed a transaction with you. How did we do? Right? Yeah. And so what does that look like? And I can tell you that, we work on a 5-star system, just like many other people. So it's really relatable and understandable to kind of see. And I can tell you that our overall company scores in 2020 was like lower than it is today. Right? So we were doing less business in 2020 than we did in 2021. We did less business. The market grew. It was crazy. And like, there's lots of reasons for why that is. But if I look at our customer service scores, and we survey buyers, sellers, selling agents, buying agents, right? So all 4 constituents. And if you look at the scores across the board, over that period of time when we did more business, we're like more stressed, like crazier, our customer service scores went up. And so if that's the case, either consumers' expectations just dropped, which I don't think that's it, or part of the technology that we were using, the processes that we worked out, were actually connecting with people on a level that was was at the end of the transaction, they said, "Hey, I think that what you gave us was a great service."
So that's really terrific. And is I like to think that there are some of the technological changes that were forced upon us during the pandemic that will stay because it's actually a better world. People are more competent with Zoom, and that's a really effective thing. It's good for our world. So awesome. So that's a great way to measure it. The service scores are up. So let's talk about customer-facing technology. You mentioned digital signings. I refinanced during the pandemic, and I didn't go to an office, but somebody came to my kitchen, and it's still a stack of papers.
500 pages. Yep. You need ink on it.
Yeah. So let's talk about digital signings and when does it happen? What's holding it up? And are there implications for better service for the consumer, or better pricing, or more transactions, or what are the implications that we see once we finally move into a digital signings world?
Yeah. So let's talk about first just what digital signing actually needs, right? And so if you have the ability, and everybody is really familiar with DocuSign, right? So, hey, I got something, I DocuSigned it. That's kind of par for the course. If you bought a piece of real estate, more than likely you DocuSigned your contract to send it over, right? And so that's normal. That's what is different that I think is going to kind of transform the customer's experience is this whole remote online notarization, which is if we're talking about digital signings in the settlement world. And there's lots of different variable terms. There's, right. But let's talk about RON, or remote online notarization. It's where we're notarizing documents that need a person, historically need a person sitting in front of you, verifying that you're that person. You get the little thumb print and you put it on, and they take out your driver's license and write it down, and you write your name in a book, right? That process, right, which is the thing that required people coming into your office so that you can meet the notary there, or we have notaries and then we sign you up. That process, when that goes digital, when you and I can be on a camera like this, and I show you my driver's license on the camera and you verify my identity, right, and then we can do that signing digitally, right, which is happening other places, not in California, because a whole host of reasons that we don't need to get into here. But when that happens and people start having that experience where I can sit in my pajamas and sign the loan documents from my house, and I'm talking to somebody that's articulate and can answer my questions while we're going through that. And it'll still take some time to because you have questions when you're going through your loan documents and you're looking at the term and you're is this right? And I want to make sure all that's good. When that happens, that's transformative. When that gets to scale, that is a really meaningful, once you do that, I don't think that you'd ever go back. Why would I ever go and drive my car and sit in a conference room and wait for somebody to come in and do the whole signing thing? That experience from a customer standpoint, I think is going to be really transformative. Now, you asked what's holding that up? A ton of stuff, right? I think that you have so again, regulated by the state. Right. So California hasn't gotten on board with remote online notary. So there's two things. You have regulators and then you have lenders, right? Because lenders and states, so you have to notarize the grant deed, right? The piece of property that's saying, hey, this is the transfer. And then you have your loan documents. And so you have lenders that are requiring right now actual ink on paper. They don't even let you scan it and send it to them, even the ones you got in ink on paper, because that's essentially a digital signature. It's just a live digital signature that you digitized and then sent. Some are, some aren't. But it's when lenders are saying yes, we will use this as the final verification and done. I think that's when those are the two things that I think are holding up remote online notary en masse.
So state level regulation.
Yep.
And then lenders tend to be national level.
Correct.
Are they also? Is it also with the mortgage markets on the back end? Are they involved in this transition, or they just get, if the lender is underwritten the loan, does Fannie Mae say, I want wet signatures on these 18 pieces of paper?
Yeah, so that's a great question, Mike. Like, I don't know if I'm in a position to kind of like be able to articulate kind of what happens on the back end of like the secondary mortgage market and like the compliance. But there's always a compliance component, right? So like I'm in a compliance heavy and heavily regulated business, so are lenders. And so there's oftentimes lots of hoops that you have to jump through. And then it's all about a risk. So like what risk am I willing to take, right? To be able to do something that's new that a regulator might see as old, right? Like, I don't know. So I think that you're going to have smaller lenders adopt this a lot more quickly than you have the Wells Fargos of the world, right? Now, somebody at Wells Fargo made, no, we have a whole department for that. And like, we're working on that. And that's true. Like, but the en masse, like I'm talking about like when you and I, when we refinance our house or we buy a house, like that's the norm versus the exception. Right now, it's a great exception.
And do you foresee a world, or maybe how far out is the world where I like an entirely online transaction?
So I think that
And
there's
let's
a
talk about
difference
California
between,
specifically. Like,
I was going to say, I think there's a difference between an entirely online transaction and a humanless transaction.
Oh, okay. Yeah, for sure.
Right. So, I think an entirely online transaction, like outside of notarizing the grant deed and like the notarizing in California, notarizing your, note and deed of trust as required by the lender, like we're there, like we're 97%, like you can do most of the things digitally and transact digitally, right? In a settlement. And those are kind of like the two friction points. And there's going to be some friction points in the transaction. But yeah, you can, that is a possibility right now in other states. I think that you can do it completely digitally, right? Where you have, and you can do a remote online notarization if you get a lender that can approve, especially if it's like an all cash deal and you don't have a lender in it, you can do it completely digitally.
Right. And but the fact is, so that you can do it, but the fact is, like, I still signed 200 pieces of paper in my kitchen.
Yeah. Well, you got to remember, you got to remember what all those are. Those are a lot of CYA documents for lenders. It's like, hey, you acknowledge X, Y, and Z. And Z. I mean, I don't think that we can take, loan doc. Maybe you could, but it's all about risk and having people acknowledge that there is risk in taking out a loan, right? Now, will it get to the point where you're like signing your iPhone, iOS update, like user agreement? That's probably the same number of pages, but you're just like saying, yes, I agree. Right? Like it's easy to do that with an iPhone and your user agreement because like the stakes aren't $1 million house or a $700,000 or $400,000 mortgage, right? So there's this balance of what we call speed and security, right? Like fast and secure sometimes have like an inverse relationship.
For sure.
And so I think that it's just really finding that proper balance of fast and secure, right? Because consumers are going to want fast. People that provide insurance want secure, or loans, right? And so how do you balance those two things where you get a great customer experience and provide the security and like the ability for companies that absolutely need to cover the risk?
And is Pango in a position to provide some leadership on that for both those constituents?
Well, we got lots of ideas.
Great.
We always have lots of ideas. But yeah, I mean, I think like an area that we're, again, California, I'm not sure why we're unable to do this in really any meaningful way, but like one place that you could get something that's really secure that a lot of people are talking about and companies are doing right now is like an earnest money deposit. Like an earnest money deposit is lower stakes, right, than a payoff or just because it's 3% of the transaction typically. And so if you could really make a earnest money deposit, and there are companies that do this today. So like it's just not widespread in California. So this is the context of which we're talking about.
Yep.
But that's an easy kind of like thing where you can really vet out, hey, what are the stakes? What are the risks? And can we go to this speed, right? Instead of like, seriously, like you got to go down to your bank and like fill out this. I fill out a form, right? Like an actual paper form, right? And sign it to do a wire.
Yeah.
Like that's my experience today, right? Whereas like, hey, it's $15,000. I mean, I can transfer it in between my accounts. Like I want to be able to provide some type of Venmo experience for a buyer on their phone to be able to say, hey, it's secure and it's fast and they're lower stakes.
Yeah.
I think those are kind of areas that we could, implore the regulators to allow more seamless or more creativity around that. And there's some really
probably happen
cool,
more quickly.
yeah, and there's some really cool integrations that people are currently doing in the space. Like payments, I think is a company. Endpoint's doing this. Right now, there's a couple of companies in Seattle that have done it. That are just integrating with like Plaid and Adwala and stuff like that. So
neat. All right,
it's cool.
That's super cool. So the other big looming technology in the transaction space is, as we've had a lot of media coverage, a lot of speculation in blockchain. And but obviously, like not a lot of adoption. There's a couple of companies that are doing some work there. Do you have thoughts on blockchain and in specifically the settlement world that you live in every day? And it's okay to be skeptical. I treat me as a total novice in the space because I don't really know anything about the nuances. Like I've bought 3 houses in my life. Like that's what I know on that side.
Yes. And so this is evolving. I think blockchain technology is amazing. The underlying technology behind cryptocurrency and NFTs, the underlying like decentralized ledger in terms of like a one system of record that is immutable, is super powerful. Like really, really, really amazing. Has the ability to be transformative. I think so then you're like, okay, how do we apply this to our business, right? And I think that there's 2 kind of like fundamental ways that people are talking about it. The first is like, how do I tokenize property so that I can own fractional or some type of like tokenization of assets, right? And so they were talking about tokenization earlier. Now they're talking about NFTs and how do you do that? And there's a lot of like legal hoops that you got to jump through. I know like Proppy is a company that's a leader in this space, that's doing a lot of cool creative work around this, and really trying to get into the transaction understanding and doing that. So we've worked with them a little bit. We've taken as a company, been able to enable transactions using cryptocurrency. It's basically a crypto to cash transaction. So we've done several of these transactions over the last couple of years. We were one of the first in California to kind of complete a couple where buyers were buying a house with Bitcoin, but we were converting it to US cash.
And so let me stop you there before we go on. Like that's really interesting. So were they essentially cashing out Bitcoin and turning it into down payment?
Yes, down payment and or payoff.
Okay.
Yeah.
And is there anything that like there's a question that's a pretty common question in the past year, although it's starting to fade a little bit now as the crypto markets have come down. But there's a lot of wealth generated since the beginning, since 2 years ago in crypto.
Yeah.
And so are there anything that consumers need to know about that? Or like, is there anything that have popped up as difficult or unusual in that space, like that's gotten in the way, or anything we should know?
Well, there's lots. I mean, we could do a whole podcast on this topic alone, right? Like there's a lot to kind of unpack. I think for somebody that has created some wealth using like Bitcoin, cryptocurrency, whatever it is, right? I think that the things that you need to think about is it's not US dollars. Like you have Bitcoin, or you have Ethereum, or you have Litecoin, or you have Dogecoin, or you have whatever you have. It's like, and people want to interact and transact as if they have US dollars. That's just not the case. Like you can have a lot of pesos, but you can't buy a house in pesos, right? It's just, you can't do it. Like you may be able to get somebody to lend you US dollars based on the pesos that you have, but you can't. So in terms of like a currency, yes, it's more global. Yes, it's decentralized. It's all of those things, but there's still not really a great way. And you will find people that will be able to argue with me on this to transact, right, using crypto, because you have to convert, because a lender is not going to take a payoff in Bitcoin. Like if there's somebody that has a house and there's a like $400,000 loan on it, and you got to clear the lien on that house by giving Bank X $400,000. There's not a lot of banks that are going to say like, yeah, I'll take that in cryptocurrency. And when you're doing that outside of a U.S. regulated bank. So it just creates some layers of complexity in the transaction. The other thing you have to know is, my belief is, you have to like where the cryptocurrency is coming from when you're purchasing a transaction matters to regulatory folks. So there's a lot of hoops to jump through in terms of like KYC, AML that you don't if you just have money in a US bank.
KYC is right? Know your customer. Meaning
know your customer.
I know this is not fraudulent, stolen Bitcoin. And what's AML?
Anti-money laundering.
Money law. Okay.
Yeah, because if you got a bunch of like stuff that was illegal and you wanted to convert a bunch of money, right, like cryptocurrency into US dollars, what better way than to like get into contract in a house and then cancel and like, yeah, now I got all these dollars. It's like they want to know. So there's just going to be, if you have those assets, you just have to know, like there's a lot of verification involved and some hoops to jump through, and it's just different and takes a little bit more time than if you're buying with US dollars. Just right. As if you had a bunch of pesos, you're going to have to convert. You have to onshore those into US dollars, and there's going to be the same type of scrutiny kind of played to that as well. So it's like,
so then
it's not a new problem.
It's right. It's not a new problem. It's just a new technology on the problem. But so that to get to a world where you could buy a home with Bitcoin, or name your currency, you would likely have to have the homeowners, the seller's loan is denominated in Bitcoin.
You can buy a home today with Bitcoin. You can buy it today. We'll do the escrow.
Okay.
Like no problem. The catch is you have to convert that Bitcoin into US dollars. It's like there's an exchange that has to happen, and there are fees associated with exchanging Bitcoin to US dollars, and it can be expensive to convert.
Yeah.
Right.
But if I wanted to do a transaction in Bitcoin without that conversion step, it would have to be a world where the sellers has a mortgage denominated in Bitcoin, and that was a lender who was a federally regulated lender who could lend in Bitcoin, because even there's like the crypto companies now that are trying to do lending programs, and like they are the SEC is like, these are securities, and you have to be you got to be a bank if you're going to do
especially if you're lending against it, right? Yeah.
So before we get there's a ton of infrastructure that has to happen before that does. But today, right now, the process is you convert it to dollars, and then
and there's still a neutral third party. The other part of it is, so we're just talking about the transference of money for payoff, right? So that you can do it. The other part is like recording and ensuring a title, right? So there's this whole idea of like having a decentralized ledger. And I think Goldman Sachs came out with a study, I think it was probably in 2017, that says, hey, the title industry is going to be one of the things that blockchain will disrupt, right? And everybody's like, hey, it's forthcoming. I don't think it's forthcoming in the US, but I think like a country like Sweden, right? Or if you get some company in Africa where like land registries are not real organized, and you have like one central place that is like controls the land registry. Land registry happens county by county by county by county by county by county by county in the entire United States. So like for us to wholesale convert to a decentralized ledger that's one like immutable record, or call it, there's 56 counties in California, 56 different ones, like that is going to take a pretty significant movement in the regulatory kind of like environment to make that happen here. So I think it's going to be slower here. Doesn't mean that it's not going to happen. I think there's going to be pressures for that to do it because the way that we do it now is kind of funky.
Yeah.
But I
know
think
the Proppy team who's really
Yep.
leading on that in the US
Totally.
was originally from Bulgaria. And, in Bulgaria, there's a lot more fraud use cases that you have to worry about. And so you could understand why a blockchain would be useful for that. And in the US, there's a significantly lower case of that. And so then so then maybe the tokenized version of things is like maybe the path forward in the US.
Where you hold properties in LLCs and then you tokenize the LLC, not the actual. Yeah. So it's a interesting, there's a lot yet, I think, to be figured out on this topic. Right. So I don't know if we're making any kind of like radical breakthroughs in this, but like for somebody that's just kind of like new to this conversation, it is definitely a conversation worth following and continuing to look at. It's not irrelevant. I think that a lot of people, would view blockchain, crypto, all of these things as irrelevant 3 years ago. Like, nah, it's not going to be anything. It's fine. It's just a fad. It's going to go away. I don't think that's really the case. How it's going to show up in our everyday life and use case in the United States as it relates to real estate, I think that there's a lot yet to be determined. And that's where it's going to be an interesting story to follow.
Well, I really appreciate that lesson on there. That's great. So let's leave crypto and blockchain there for now. We'll put crypto as the headline of our podcast so that we get a gazillion listens to it. But
just got to put NFT next to it.
Right. But no, that's really insightful to me. So, but let's switch gears. So you've done some transactions in crypto, but what other things are happening in the transaction right now? What are insights that you see that have been happening over the last couple of years? That anything that is notable that we should be paying attention to right now?
Yes, you gave me this as like a prep question, and like my little monkey brain has like 10 different things, and I need to narrow them down into something that's like really good. I think that there's some market trends, and I think that there's some just general kind of like company and things that are happening. So like, let's just kind of knock them down one at a time. So like market wise, it's interesting. Like the market has been interesting, and so we use Altos research data all the time. I even write like a monthly kind of like recap using like a lot of your regional stuff and kind of overlay it with some of our data, our transaction data that's closing data, because I think we're a statistically significant, like kind of like reflection of the Southern California market. Right. And so we look at that. And one of the things that I would say is, in the last year, we had 66% of our non-refi deals, right? So residential resale, did not have a loan broker, which means like 34% were cash. That's a significant amount. So then you say, okay, well, how do you unpack that? That's higher than it has been, right? All cash deals are not that way. And I think that is a result of a couple of things, right? So you have more investors in the market. You have commoditizing of the single family homes and private equity companies getting into that business, which has been making news. You have things like iBuying that's happening that uses cash. Like, so they are all cash deals that are, again, they're like 1.5% of any kind of given market. They're not as significant outside of maybe Phoenix, but like they're not. And Mike Del Prete does a great job of covering this segment. I'm a big fan of his and the research that he does.
Really good. We'll have to have him on the podcast soon.
Yeah, he's really, really great. But so that's a big chunk of the market, right? That's not really, unless they're getting that money to make an all cash deal by borrowing it, right, from some other way, whether it's a fund or something like that. It'll be interesting to see how interest rates play on that. I also looked up, hey, what percentage of our deals are bought by LLCs, which is kind of a reflection of investors, right? So what were the buyer was an LLC. Now that they sometimes transfer afterwards, they sometimes do all this. So this is an exact like one-on-one, but we had, over 7% of our buyers are showing up as LLCs as buyers. That is also higher than what it's historically been. So there are a couple of just trends that we're looking at that are kind of outside of who is buying these houses, what's happening. So all cash deals, and you wonder once prices start to slow, right? Which I think you and I are on the same page in terms of in 2022, especially in California, you can look at globally. I don't think prices are going to take a dramatic hit. You just have a supply and demand issue that is not going to allow that, right? But once that does happen, and if you assume that most of those cash buyers are investors, all of a sudden, if the equation gets flipped, what happens to that segment of the market, right? Which I think you could say, some of it doesn't exist anymore.
Some of what doesn't exist anymore?
So I think some of those buyers go away.
Got it. Some of
those buyers go away
when
money gets more expensive, right? Home prices start to soften so that you can't turn around and sell. Now, it's all going to depend on what the strategy of the investor is, whether a buy and hold and they're renting them out at mass, or whether they're fix and flip folks. Yep. So it's about a math equation. So it's understanding what are the levers that they have to pull for them to make money on the transaction. And so interest rates play a part of that. Home prices play a part of that. Cost of labor plays a part of that. That should be slowing things down. I don't see it happening, which is crazy.
Yeah.
I think that's.
Yeah. So that's great. So the 34% cash buyers is really fascinating to me because mortgage rates have been so low. So why are they paying cash? Are they getting cash?
I'll tell you.
From another source? It's even cheaper financing. What's?
I'll tell you my theory.
Yeah.
Now, I don't know. It'd be interesting to kind of, I'm trying to figure out how you'd get the data to validate this, but my theory is a couple of things. So one other point of data that you need to know is if you look at close ratio. So how many deals open and then actually close? Because some deals fall out. And so one of the reasons why our industry did so well in 2021, or at least I'll just speak for the Pango Group, is our closing ratio went up by over 10%. Meaning, on an average year, in 2020, we closed 71% of the resales that we opened. Right?
Okay.
Normal years between 73, 74, 75%. So 2020 was a little low. I think we all know why.
Yep.
Right? 2021, over 78%. So we had to open this, think about that, right? So if you're closing 78% instead of 71, you can open, the market can do the exact same thing and you're going to do a ton more revenue because you've now closed a bunch. So why is that? Why are deals not falling out, right? And so this goes back to what we were talking about with cash. I believe, we're talking about hey, we have evidence, we have data, and so we draw conclusions on those data. They could be right or wrong. Right? Because that's what data is, right? It helps us inform some of the opinions or beliefs that we have. So I believe that closing ratio is really driven by if you get the opportunity to buy a house in California, you're not gonna the deal's not gonna blow up because of the buyer just said, I got a better option. Right? That's not happening today. Right? The other thing is I think that cash makes it more attractive to sellers. So I think that you're going to see, because of the competition in the market, you're going to see more cash deals. If you can figure out a way to get a cash deal in the mix of the 20 other deals, you maybe put a little bit higher on the list of acceptance than if you weren't and you were going through traditional financing and had to do the 17-day financial contingency and all of the things that you're doing. So I think that plays, I think the competition in the market, the low inventory, with the demand, equal those two things. And I think that deals aren't falling out because once you get the place finally after the 3 years of looking and getting outbid 870 times, and you make it happen, right? Yeah. And if you can put yourself in a position to be all cash, whether you're using one of these companies that will help you facilitate that all cash, and there's a lot of programs that are doing that, you do, because if you can be more competitive, you will be. I think those are things. Again, I'm looking at information that I'm getting from the market. I'm saying, okay, I think that this makes sense. I think that there's a correlation here. I'm not sure if it's all causal, but like I think that there's a correlation between those things, which is really driving up the cash buyers.
I buy that. I that makes a lot of sense to me. Cash offers not because I have more cash or because the loan is a bad deal, but just because it helps me get the deal done. And then maybe I do the financing later.
Well, that's what I mean. That's what would be a really interesting thing to figure out. And I don't know how you'd get like to validate that data. It's like, hey, how many all cash deals that closed in the last month got refinanced in the next 90 days?
Yeah. That's
right. Like that would be an interesting, like I would be super interested in seeing like that kind of conversion, but like we could geek out on the data all day long.
For sure. One other data point, and I'm interested, you may not have this off the top of your head, but maybe you do, is that the time to close from offer to close. Did that compress?
Not dramatically. So we looked at that. We looked at that as well. And it hovered. It didn't even during like the pandemic, like we were still looking in like the high 30s. Do you know what I mean? Like, and so like the on average that when you get an accepted offer where you open escrow and then you close that deal. And I don't have the exact number like today over the trailing 12 months, but I've looked at this number several times over the last 2 years. And it really hasn't fallen much out of, between 34 and like 39 days.
Okay.
Like that is kind of the area. You get outliers. You obviously get outliers. It's a contract piece. Some people say I want a 40 to 5 day escrow because of blah, 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 blah. They want to move out later. But, I don't see it north of 40 much in our residential resale business. And it didn't, I thought I was going to see a bigger move in that. I thought we'd be like 50 days plus. It's going to take a longer time. Like all of this, like COVID was going to slow everything down, and I just didn't see the data.
Didn't see it, and it didn't have.
It didn't move it significantly.
Sometimes the competitive offer says, "Hey, I can close in 15 days. I'll do all cash, and I can close in 15 days." But that didn't happen significantly either.
No, I still think it takes time to do a transaction. You still have to say, like, "Am I getting what I just walked through it for 15 minutes and I had to make an offer by like 2:00. Like you still have to inspect the house and make sure it's not a dog. You know what I mean? I think that there's some time that you have to go through in a transaction that you can't, again, it's that speed versus security. I would consider like getting what you think you're paying for as part of that security, part of the equation. I don't know, like, yes, mechanically you can make a deal happen in 4 days. Like we could close a real estate deal on all cash in 4 days. Like we could do that. Yeah. Right. Do you want to?
Right.
Should we?
Yeah.
Like, if I'm buying my mom's house, right, that I've lived in and know everything that's wrong with it, and it's not a complete stranger that I'm buying from it, like, yeah, I can see us like making it work.
Awesome. That's really, really insightful. So that's actually useful for me because as we track, the active market and the new listings and then the full active market, it's the house gets listed today. It gets an offer in March. It then closes in April, and then you start seeing that data in May. Like that's why we wanted.
No, that's why I love your data.
Yeah,
that's why I love the Altos data is because it's like it's actually what's going on in the market now.
Yeah,
right. Because
the one time that did compress was in coming out of the bubble burst. We had a home buyer tax credit that expired. It was April 1st of 2010.
Okay, so I was going to say this is like 9-10. Okay,
yeah, and what happened was it pulled a lot of demand forward, and it pulled a lot of closings forward because I got to get it in before April 1. And then we watched a compression of our lead time on the data happen at that point, but we really haven't seen it right now. That's great insight. I really appreciate that.
We see that on an annual basis too in December. There's a lot of incentive for a lot of folks to get deals closed before the end of the year.
Yeah. Okay.
So we see the big closing month in December often when you wouldn't say like, hey, why are these? And so December is always like and it's that race to the finish before the end of the year because of whatever potential tax changes or anything that may be coming, forward. I know that was a big deal this year.
Yeah. Oh yeah, for sure. And then of course, as we go into a rising rate environment, we're doing fewer refis. You guys are mostly purchase focused. Yeah. Oh, yes. Finally, we could get, yes.
Yes.
Oh, we can take a breather. Yeah. So, but as long as as the business is focused on buyers, like,
Yeah. Yep.
Anything else on that front that we should be paying attention to? Anything scary?
In terms of the rate stuff?
Yeah, rates and I don't know. Like, so one of the things I'm interested in with when I talk to my guests here is, are there things on the horizon that are going to derail this train that we haven't seen? Things that you see or that you're afraid of that are going to that we should be paying attention to.
So again, this is so I feel like I've been terrified for like the past 5 years because the market's been so good. So that I'm like just kind of like going like, no, but there's something going on. Like when's the other foot gonna fall? And I don't know if you just get desensitized to it. I think that market psychology is really interesting because when you think things are good, you think things are always going to be good. And when you think things are bad, you think things are always going to be bad. And that's not actually what happens if you look at the data, right? But that's how people think and make decisions. So we're concerned. So if I'm looking at it from my business perspective, right? So it's like, if we look at our industry, like what we're most concerned about is market velocity, right? So I care about how many transactions are happening in any given year, not what home prices or interest rates are.
Mm-hmm.
Like those are only indicators of what the number of transactions will be, because like on $1 million deal versus a $500,000 deal, our fee's not dramatically different. It's not dramatically different. It's different, but it's not dramatically different. It's not like half, right? Because there's risk. There's just baseline risk with transacting, and so you scale up from there. And so I'm not concerned about home prices. I kind of want home prices. I'm not going to say this out loud. I kind of want home prices to kind of soften a little bit because I think affordability is an issue, and you want people to be in good financial scenario and not be house poor and all of these other things, which we talk to our employees about. You know what I mean? Like, how do we financially plan really well? So I am interested in seeing how the Fed handles inflation, because that's something that we haven't really had to deal with in a long time in any kind of meaningful way. And that's more part of the dialogue and conversation right now. Interest rates have been really low for a really, 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 really long time. And so it'll be interesting to see how that impacts market velocity. It will obviously impact home prices, right? It has to. There is an inverse correlation, relationship between interest rates and home prices. Now, in little micro markets where there's just so much demand and people don't borrow money to buy houses, you know what I mean? Like if you're in Corona Del Mar, it's not really going to affect it, right? Like, or some really, really fancy places. But for the most part of the market, I think that's where you're going to see some softening there. Does that mean less houses will be sold? That's why it's like inventory is a problem. But if you have and that's just the net inventory that exists today. But if you have a bunch come on and a bunch come off and a bunch come on and a bunch come off, like I'm okay with that because the market velocity is still kind of going. It just means that homes are transacting at a level where that slows down. That's where we need to take a good look and say like, okay, well, what is that causing? Do you know what I mean? Like what causes the actual market velocity to slow?
Yeah.
Right. And that typically is external factors from the real estate market itself. Right.
It's
COVID. Like when I can't COVID, right? But that went down.
That was 3 weeks.
And then boomed back. Like Mike Del Prete called it like a check mark recovery. He was exactly right. I mean, it was like boom. And it came back with a vengeance. And by the way, we did not lay one person off during that time. We are so thankful because like we were like, I don't know how this is going to last. Could this last forever? You don't know, right? Like that market psychology thing. And man, we are grateful we stuck it out.
Good for you. That's really great. That was really hard. We held on to everybody, but it was scary for
super scary
3 weeks.
Super scary.
Super scary.
Yeah.
So that's really interesting. So the external factors, and those of course we can't predict, but there's some external factors happening right now in the world that are frightening. So, So Joe, this has been terrific. This is exactly what I was hoping to get out of it. Like, really dive into the geeky parts of the transaction and where the world is going, and like what we need to pay attention to. And so such really great insights. So I really appreciate it. To wrap up, are there places that like where should listeners go find you, interact with Pango? We talk to a lot of realtors in a lot of Southern California in this business. So so where should we reach you?
So pangogroup.com is our website. It kind of gives you a pretty good overview of kind of what we do, what our brands are, what kind of companies that we're running. I'm active really on LinkedIn. That's kind of like my go-to kind of like business interaction. I try to put out, I used a lot of your data to kind of make commentaries on the market, because I've just found it to be really, really valuable. I mean, you and I have been in business for well over 10 years, I think. And it's been a great, I feel like, partnership. You've added a lot of value to our business, and I think that we try to give your data away as much as, you may not like hearing this, but we want to give it away as much as possible, because I fundamentally believe that like a more informed customer, like with good data, is a better customer. And so like we just want to be like, sorry, give it out. Like if we want to interpret it, so then you're like, okay, let's see how this impacts us in our business. But to find us, go to pangogroup.com. You can reach out to me on LinkedIn. Would love to engage. I'm a data geek like Mike, so we're like, I'm always interested in hearing like really interesting, diverse opinions about kind of what they think is going on in the market. So I'm a big fan of Mike's, and Mike, you've been a great sounding board over the years in terms of like what's going on in the market and how to kind of dig into this stuff. So I've been just really grateful and blessed to be part of the journey with you, and look forward to many more years.
Joe, thank you so much for your time today and your insight on the transaction. It's a real specialty, and so like I said, I've only bought 3 houses in my life, and so it's really useful for me to pay attention here. Okay,
awesome.
So thank you, everyone. That's all the time we have for today. Thanks for joining on the Top of Mind podcast. As a reminder, you can go to altosresearch.com to get a free consultation on how using market data in your business, how Joe uses the market data in his business.
Call me, I'll tell you.
that would be terrific. Thanks. That's all we have time for today. More soon.
Thanks for listening to Top of Mind. See you again next time, and be sure to click subscribe to get future episodes.